Hello everyone, welcome back to Nathan Trading Academy. I hope all of you had a wonderful weekend. In today's video, we will analyze the market for Monday, that is 27th July 2026, using various parameters, some of them like India weeks and daily chart analysis and 50 minutes time frame. And also we will be considering price action and GIFT Nifty, and also we'll be taking into account for the analysis option chain and analysis. So watch till the end, because I will share the exact levels where buyers and sellers are expected to dominate. So global view, if you see, there are no major RBI announcements scheduled before Monday's opening. So the market will closely monitor global sentiment. So, and also it is going to monitor US futures and Asian markets and dollar index and also crude oil movement. So GIFT Nifty is trading around a previous close. So let me open that. So this is the GIFT Nifty. So if you see that the previous close, it is close near that previous close. So indicating a flat to mildly positive opening, but confirmation will only come after the first 15 minutes of trade. So if you see that Friday's institutional activity, the Friday's institutional activity shows very interesting picture. So let me take to that. So this is the data which we have from the NSE. DIA, that is domestic institutional investors, were strong buyers. As we can see, that is around 5,589. That is the net buying. It is in crores. And foreign institutional investors continued aggressive selling. That is 4,024 crores. This clearly tells us that domestic money is still supporting the market despite foreign selling. This is one reason why the market is not witnessing panic selling. So that same thing can be observed in India VIX. Let me take to that India VIX chart. So here, which we can see that India VIX is closed at 14 after cooling down from recent highs. So this indicates moderate volatility, no panic in the market, and intraday swings are still expected because of high VIX. A VIX below 15 generally supports a range bound to mildly bullish trading unless unexpected global news appears by tomorrow market opening. Now let us look into Nifty chart in 15 minutes time frame. So current closing price is around 23,767. So which it was the previous session closing. The market has taken support near the previous day low liquidity zone and managed to recover from the day's low. So from here to here, it is managed to recover from low to high. And important supports, as we can see here, this is 23,807, which is going to be the important support. 23,000 immediate resistance it is, and 23,606 is going to be support, very strong support. So, and further resistances which we can see here, 23,960 and 23,990. And bullish scenario for tomorrow if Nifty sustains about 23,807. That is at least 15 minutes candle closing and sustains above it, then buyers can push towards 23,960 or 990. A breakout about 23,990 may trigger further short covering. Bearish scenario, if Nifty slips below 23,606, selling pressure may increase sharply. So moving to Bank Nifty, let's open the Bank Nifty chart, 15 minutes time frame. So closing, as we see, it's closed 56,694. Price recovered nicely from low of the last session, showing buying interest near lower levels, and immediate support, which we can see 56,023 and 56,374 also, which is going to considered as a support. The reason price is closed above this level, and immediate resistance, which is going to be 56,970. And the bullish view for tomorrow, if Nifty crosses, Bank Nifty crosses above 56,970, or even the below level 830, 56,830, then expect movement towards 57,800. So that is a huge gap. So bearish view, failure to hold if 56,374, then first it may reach towards 56,000, and further if it is can move if it breaks 56,023. Now let us move to Sensex. Sensex also recovered from its low. So here you can see that, like same as Nifty and Bank Nifty, immediate support lies, that is 75,474, and the resistance, which, because it is stopped over here 56,151, is going to immediate resistance, and if it breaks above, then we can see the moving towards 76,726. Now the same can be observed for Nifty and Bank Nifty from the option chain. So let me take to the option chain for Nifty. So looking at the option chain, a heavy put writing is visible around the lower support zone. Like if you see 23,700, the open interest, which is 1,27,000, and 23,600, 1,21,000 open interest. Even at 23,800, huge open interest, which is 1,24,560. So this is showing heavy put writing is visible around those lower levels, indicating buyers are attempting to defend those levels. And strong call writing is still present in the higher resistance zones, making upward movement. So if we see at 23,800, which is 1,11,000, and 23,900, which is 90,000 open interest, and 24,000, which is around 2,07,000 open interest is there. So here, which tells that strong call writing is visible, so making upward movement difficult unless the fresh buying emerges. Therefore, Nifty is likely to remain range bound unless one side gets a decisive breakout from 23,700 to 23,900, or near about 24,000. Okay, so now moving to Bank Nifty option chain analysis. So Bank Nifty option chain. So here also at the put side, 57,700, which is going to act as a support. 17,000 open interest, 17,600, and we at 56,500, it is 24,000 open interest. At the call writing at 56,800, which is 17,000 open interest, and that heavily call writing is happening at 33,832. Open interest are available at 57,000. So Bank Nifty also shows strong put support around current levels, while call writers remain active at higher strikes, particularly 57,000. This indicates support is becoming stronger, but resistance overhead is equally strong. Expect a breakout trade only after these zones are crossed convincingly. So buy only if Nifty sustains above immediate resistance with the volume, and Bank Nifty crosses 56,831 and holds. and sell only if Nifty cross below 23,600 or Bank Nifty falls below 374 with a strong selling volume. So during the first 15 to 20 minutes, avoid trading unless a clear breakout or breakdown is confirmed. So overall, the market is showing signs of stabilization because DIS continues to buy and continue to buy aggressively because FIs remain sellers, but domestic institutions are absorbing the selling pressure. For Monday, our bias remains range bound to mildly bullish, provided key support levels hold. Always trade with a proper stop loss and strict risk management. If you found today's analysis useful, please like the video, share it with your trading friends, subscribe to Nifty Trading Academy, and don't forget to press the bell icon. I'll see you again with another detailed market analysis. Until then, trade safe, trade smart, and stay disciplined. And at the last, disclaimer, so Nifty Trading Academy is not SEBI registered. This video is created purely for educational purposes. We do not provide buy or sell recommendations. Please consult your financial advisor before making any investment or trading decisions. So until then, trade safe, trade smart, and stay disciplined. Have a profitable day tomorrow. Good night.